Consumer prices rose last month while the annual inflation rate hit its lowest level since February 2021. The consumer price index rose 0.2% in August, the same increase as July. Now, the 12-month inflation rate now sits at 2.5%. Core inflation was up, mostly due to a jump in housing prices. CBS News contributor Javier David is joining me now to break down what this report means. I hope it's good news. Walk us through the latest numbers.
Yeah. So there's good, there's bad, there's ugly. So the good is headline came down 2.5 year over year, and recall that in 2021 or 2022, the high was 9.1%. So we're a long way from where we were. Core inflation is surprisingly elevated. I was surprised to see it sort of stuck above 3.2%. We went up a little bit month over month. So that's not so great. But services is still very, very hot. Almost 5% year over year.
Wow.
Rose 0.1% month over month. Shelter costs, as you mentioned, people housing, still very, very hot. And transportation costs, or transportation services rather, almost 8% year over year. So these are some pretty hot sectors that are still, but there's good. And again, energy prices are almost across the board lower. Double digits down, all double-digit decline year over year. Gas, even though we're in summer season, that's coming off. And a big part of that is because global Brent prices have been falling and are at the lowest level of this year. So that's good news. So it's when you're going to the pump, you're not paying as much.
So, you know, we know that the Fed's going to be meeting next week. The general consensus is that we're going to see a cut. It's just sort of how much is it going to be, and what does that say about how the Fed feels about how things are going?
Yes.
Any of these numbers, could they have an impact on whether we see a point, you know, a quarter of a point or half a point?
Yeah, I don't think there's anything in here that alters the status quo. And the status quo is basically we're going to get a cut next week. The key is in the language and the dot plot that we all tend to pay attention to. Is this the start of a sustained easing campaign? How aggressively do they go? We're more or less the thinking is they're going to give us 25 basis points. Maybe they should go 50. Maybe, you know, because the picture is darkening. There's a lot of percolating concerns about the state of the labor market and the number of layoffs that have been rising, unemployment rate sort of, you know, starting to tick up. We're not nearly at any level that is considered recessionary, but we're seeing a noticeable amount of softness in the labor market. The Federal Reserve Chairman himself said he doesn't want any more softness in the labor market. So they might want to think about going a little bit harder. But all of that said, the language that they use to sort of prep the market or prep investors for, you know, this is the down payment on what we believe is going to be a sustained series of rate cuts. And that's good news for consumers and everyone else.
That certainly is, because the thing about all these numbers is they're sort of backwards facing, right? So this is what already happened, and we don't know yet what we're living through right now. During the presidential debate last night, former President Donald Trump falsely claimed that the nation's inflation is the highest it's ever been, and that prices are 50 to 80% higher than they were just a few years ago. However, the cumulative increase in prices since Biden and Harris took office is just over 19%. Where are consumers still seeing prices go up?
Prices are still going up as of last month in food. And I think the biggest problem now, food has come down substantially, but it's been sort of fluctuating up and down. But I think that the shelter costs, the story about the lack of affordable housing is a real problem. People that want to rent are finding, you know, getting sticker shock all the time. If you're trying to buy a house, forget about it. Mortgage costs are high. The available stock of housing prices high. So I think a lot of that contributes to the sense that people just feel squeezed. And if you're leaning on the use of credit cards, you're paying a lot of an APR. It's a good thing. There's one bright spot that I didn't mention, which is car prices, new vehicles and old. They've actually gone down. So it's a great time, particularly to buy used cars.
That's good. But they went through the roof during the pandemic, so are they just sort of settling into where they should be?
Yeah, exactly. That's exactly the best way to put it. Used cars are down over 10% year over year. So that's a pretty substantial drop.
Terrible for people who bought a used car during the pandemic, though. Jeez, Javier, thank you very much.
Absolutely.